Good evening, guys. Good evening. My name is Calvin, or I like going by the name KC Trades or YenomFX. By the way, that's my background and everything. So today, what I'm gonna do is I'm going to do a weekly, not a weekly, but a week, not a weekly, but what do you call this? Uh, I'm gonna do a week recap, like what I did or the trades I was looking forward to during this week. Yes. So I was mostly looking into um US dollar against the Swiss, and then EU, GU, and I think some Nasdaq trades. So those are the four pairs I will be going through on how or what I saw is potential for them to play out. So yeah, so let's go down into it. So what I do, I go with the approach of top-down analysis, but while using Falcon FX strategy. I don't know. I know some traders prefer what do you call these strategies, smart money concept, ICT, but I just feel like those ones require me to be on the screen too much. Like I need to be on the screen consistently, and I am a busy person, and I do not and that strategy does not sit well with me, or it's not suitable for me to trade it. So I chose the Falcon FX strategy, and I incorporated with the double wheelies, my Forex mastery, because I only studied the important parts, or yes, I only studied the important parts of that strategy. So what we do is we start on a monthly time frame. So the thing of the Falcon FX strategy, what you need to know is the nature of the market. So the nature of the market is basically the direction of the market. Where is the market headed to, or in what phase is the market? Is it an impulsive? Is it a bearish market? Is the nature bearish? Is the nature bullish? Or is it corrective? So, and the second most important thing is phase. Like in what phase are you? Are you corrective? Are you impulsive? Are you those are the two things, because the market moves in impulse, correction, impulse. That's how the market moves. And then the third thing will be where we add our patterns. There are different type of patterns that I learned through the Falcon FX strategy, which are the bullish flags, the bearish flags, the ascending channels, the descending channels, the arc, the falcon, and the falcon flag, the what do you guys call it, what is this, double bottom, inverse head and shoulder, all those patterns, I incorporate them. So mostly what I do is I come on the monthly, as you see right now. Let me remove this thing quickly, put it somewhere here. So as you can see on the monthly right now, we had this whole run, and one thing that I learned from the Falcon FX strategy is that in an impulsive move, there are corrections, and in a correction there are impulsive moves. It doesn't mean because of this whole leg there are no corrections, because it's impulse, and then we had some correction somewhere here, and then we had another impulse, then we had correction, and then impulse. You see that? So I can say this whole leg is an impulsive leg with corrections in it. So now we enter on the corrections when the market do its correction. So what I can see from here, I first marked out my low here on the monthly. So this is my monthly low. So on the monthly, I don't like drawing. I mostly look at the nature of the market and see what the market is saying. So I could say impulse, correction here, and then impulse. So you see here. Now let's focus on the current price, because you could just see impulse, correction, impulse. So this happened last year. I saw this analysis because I analyzed it. That time the US dollar was falling quite a bit. So I'll show you right now what it means by impulse correction. So you see this here, so this counts for an impulsive move, and then we had our correction move, our corrective move, and then we had another impulsive move. But look at this look at this part now. These it's important to keep an eye on this area here. So here I'll delete, let me delete this one. So you see this area here, I marked it, so we'll look at it, we'll look into it on the weekly time frame. So the reason why I marked this area is very important, because this last year, almost the whole year last year, the market was impulsive, like was bearish to the downside, so I picked up that. So now I go to the weekly. And sorry, let me just do this 1 week. So fine, on the weekly, so if I had to draw what I saw on the monthly time frame, would be something like this, because I had a corrective mark had a bearish flag on the weekly, on the monthly and the weekly time frame. So something like this. Sorry for that. Again, let me just do it quickly. I think I need to buy a mouse, because my mouse is not, yeah, I need to buy a wired mouse, because I have a wireless mouse, but the batteries keep on dying on me, so I'm tired of buying batteries. So you see this move. So what happened is, I had an impulsive move to the downside, and then we had a correction, then we had an impulsive move here, this whole one, impulsive move. You see? But now look at what happened here. Here we had this move, this let me draw it something. I don't want to draw it here, because I want to show you guys something else. So I'll draw it here. So now this is one of the patterns that you will learn from the Falcon FX strategy, which is the ascending, no, the descending channel, or the running channel. So basically, ascending and descending, no, descending channel, descending channel and the running channels are mostly I see them as if they are the same thing. It's just different fancy name. So you see this, even though the market, so what I can pick up from this, yes, the market was impulsive, broke down of our previous poor bearish pattern downwards. But how did it break? Yes, it broke impulsively, but what it did form, it formed a descending channel. So this is a reversal channel, like a reversal pattern, meaning we're gonna see price move upwards. Price will be reversing to the upside. So now that we know this, you can clearly see here with an impulse, correction, impulse, and that's what we look for in the market. So we know that we had an impulse here, then we had the correction phase, then we had an impulse. So I know now, fine, we had our correction phase, so we are now looking for impulsive phase, and these are the moves you want to be in, like when you're in the market, because this move makes you more money. I'm not saying you're not going to trade the corrective phases, but I would rather position myself into an impulsive phase. You know what? This is what I'm saying. Because when you're impulsive, you know where the market is going. You know the market is headed to the upside. So that's clearly much easier than you to be in a corrective phase where you are trading and the market is quite choppy. Today the market will be bullish, tomorrow the market will be bearish, to complete the whole correction of the thing. So this is what I prefer. Yes. So as I was saying, the market was impulsive, corrective, and then impulsive. So it's better to position yourself in an impulsive move, because those moves run they often play out more than a corrective move. So now that we know on our weekly time frame, we had an impulse here, and then a correction, and then an impulse here. So now we are going to the daily. So on the daily, that's where I do my current focus structures. So these structures are these are structures which I mostly focus on for the week. I trade based off those structures. So we have, I don't want to trade 2 minutes like this. So we have this. So we have this trend line. So we had how many touches? We have, I don't want to force it. We have one here, two. Second touch, we have one, two. Yes, we have one, two, three touches. So this is an impulsive move. Now we have a corrective move here. So now this is the flag. This flag often plays out, oftenly, out of 10 trades. I'm telling you, it's gonna play out 8 8 out of 10. It has to play out. It will play out. It will go into your favor. So now, and then you see, it broke out here, but it came back. So I can either say this was an impulse also, then corrective move, and then an impulse to the upside. And then we had, you see, this one is much clearer than this one. So we had an impulse here, a correction, and then an impulse to the upside. So this is now a much bigger correction to the upside. Why am I saying so? Because this whole move is an impulsive move. But what I said earlier is that within an impulse, there is a correction. They are corrections. And these corrections is where we can enter to join the move. So what the market did, it formed a correction in the impulsive move. Then we had now a bigger, much larger flag to the upside. So we call these ones our bullish flags. So you see, because now this is what I mean by nature. Nature. This is an impulsive nature. You already know the market is corrective. It's in a corrective nature. The market is impulsive nature. The market is bullish. The nature of the market is bullish. So it broke out. And I'll just adjust this one on the daily. So, and we mostly put our targets on the daily, on the daily time frame. Our targets where the market will move will be will always be placed on the daily time frame. So I put here, this is now the 90%. Is it the 90%? Yes, the 90% rule, whereby the market broke out of this, formed a correction here, and then so what it actually means is that the market will always take out 90% of the time. The market will reach here, like at the beginning of that pattern. So you see this. So what I know is that we are looking for the market, for price to go from here right now, because it broke out, to here, to here. So this is what happened last week. I will show you the trades that I took on this week. For this week, what I took for this week, I will show you right now, and how I got to them. So I think this is much better. Let me just do these buttons nicely. One, two touches. Perfect. So this is much now. Perfect. So we see this, and then we have these here. See this baby here. See? You have this. See? You have this. Oh, sorry. I just tried too much. I like to keep it here, like within the button. Yeah. Sorry guys. Once again, I'm using the pad instead of my mouse, so my mouse is not working. You see this? So we had an impulse, a correction, beautiful correction. This is beautiful. You would have entered this one either. Now in Falcon FX, the strategy itself has reduced risk, or the risk entry. So the risk entry will be here, something like this, and then I'll target, maybe see this. So I'll be having, like, let's say I like to keep my stop loss at least 30 pips, 30 pips, and then you would have target somewhere here, because you target based on previous market movement, that. So you would have gotten out with how many? 226.2 pips, and then you would have a risk to reward ratio of 7.37. So you would have made money out of this. So it's either you entered here, here it's either you entered there, or you would have entered it on the break of this. But now, because you would have ended here or on the break of this, so this is now 1, 2, 3. On the third that you would have ended here. Now this is what we call reduced risk entry. No, this is what we call the risk entry and the reduced risk entry. So the difference between the two is that the risk entry is that you know the pattern has played out. Not that it has played out. The pattern has, it's like you enter early. Let me just say you enter early with the hope, not with the hope, but because you analyzed obviously, with the hope of that it's gonna play out in your in the direction you anticipated, that. But it's just not yet confirmed as compared to the reduced risk entry, because now the market broke out of my pattern. It's out of my pattern. It gave me a confirmation. It broke out of the pattern impulsively, so now I'm gonna place my buy, and then we move to the upside. So you see this now. This is on the 4-hour chart. So on the 4-hour chart here, on the 4-hour chart, this was now last week. This was a trade for last week. On the 4-hour chart, this one candlestick here. Let me do this. This one candlestick here, they are 4 1-hour candlesticks. You see that? So we're gonna go into the 1 hour, and then I show you where you would have taken your trade. So we're gonna on the 1 hour quickly. 1 hour, yeah. You see this? You see this? You see this, baby? This. So now, and one thing about the Falcon strategy, you need to get, it's like confluences. You always get confluences. Market will always give you signs. This one is too big and unrealistic. Let me just clear it out. So you're gonna you see this, the market will always give you a sign on the direction and confirmation to where it's going. You are having this pattern here. I can either keep it here, or I can stretch it back inside here, but this is unrealistic, so I'm gonna keep it here. And this is what we call a running channel. So I'll categorize this one as a reversal, what do you call this, reversal pattern, because you are in this whole corrective move, but the market has to go up. So how am I going to do this? So the market gives you this running channel. As you know, the running channel will run, and then but it has to break out and go to the upside. So you would have entered here. You would have entered on the break of that, because you already know where you headed to the market. So you could have entered there and then target probably, like I said, 90% rule. Sorry guys, my laptop is glitching again. So okay, now I have to wait for it to respond back. Okay. You see, like I said, minimum 30 pips, no matter what. That's where I keep it, 30 pips. So, and then you would have target here would you have targeted your price, so you would have a risk to reward ratio of 3.01. so this is better. This risk to reward ratio is better. You would have targeted here, but now you wouldn't go out, because what you do is you just move your stop loss. If your stop loss was here like mine, you would have moved it back to the entry once you break out on this impulsively. And you see this candlestick, this candle was very impulsive. It broke out and then did what? Impulse correction. Simple as it is. It gave you a correction here. That I just trade like this and leave it like that. Oh, it gave you a correction here. So this could have been your second entry. This could have been your second entry here. And then you entered, and then you go in. But now the market, like I say, with the Falcon FX strategy, the market will always give you signs. This. Look at 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 this. Let me draw it nice. Look at this. Look at this. I keep like I find this strategy the best for me. It works for me. I've tried learning ICT, I've tried learning SMC with Jasper, SMC and all those things, but they just don't work out for me. I always, even if I'm learning and studying them throughout, I always look at the charts, and then I see an impulsive move, and then I see a pattern. I always see a pattern. So this is what we call an ascending channel. Yes, an ascending pattern and ascending channel. It's ascending to the upside. So look what it does. It goes here, it touches another one here, it touches here. So we're expecting it to move to the downside. like I said, always 90% it completes. Where the pattern starts, 90% it will reach back. You know that. So now we are in this whole corrective phase because this was a whole impulsive move. This is what you have to keep it within an impulsive market. You see, this was a whole impulsive. Now we're in impulsive move. Now we are in the correction phase. See that? So don't get confused. Don't get confused. Don't get confused yet. So I'm just gonna delete the 90% wrong trend line, and then we focus within this. So you see this. You see. Let me do this. Okay. You see this categorizes an impulse and then a correction and then an impulse. But now you have to break it down. You see? You could say either here or here. You know, here. So this is what we call an expanding pattern, expanding flag. You know, market is expanding. Yes, it's expanding. Or we can even call it a falcon flag. Because why? We have this. 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 Like we have these guys. We have this. So you see, we had an impulse, a correction, impulse. This you can enter. From here to here, how many pips are this? Let me see. Let me see. Let me see. Let me see. You would have entered to the downside and then you probably entered here or on the break. In that now, you'll have to refine it on the 15 minutes. So if you want to get precise entries, you go down to the 15 minutes and then you refine it further on the 5-minute chart. No, you would have entered here. So now on this one, I can't keep it on the 30. I can't keep it 30 because it's unrealistic because we had an I can't keep it 30 anymore because it's unrealistic because we had an impulse here, correction, and then an impulse. So what I will do is keep it here, like somewhere here. I target here on this candlestick. I'll target it above its weight, above its wick, you know. So I'll keep it here, and then we target this. We just target somewhere there. So yeah, now you see why I say it's not really good to trade within a corrective market is because let's say you would have entered here, so you are in profit, done. And then the market comes back here, and then you're like almost, let's say if you didn't move your stop loss to here while you entered here again, because now you see that you're in profit, you lock your profits in. So now the market couldn't take you out here, so it came back, played out, and then came back here again, make you say now here you're smiling again because now you're back into your profits, you're running again. Guess what the market does? Because now you here you would have moved your market back at break even, like not your market but your stop loss, sorry. You would have moved your stop loss back at break even, but guess what? When the market is back at when you put your stop loss back at break even, so what happens? Just look what happens. The market decided to go here, took you out at break even, and then it does this, decided to fall. It decided to fall. Just imagine, it decided to fall. You see this? It decided to move. So this is another pattern. So for you to know for you to become an expert in these patterns, you really need to study them. Like you need to backtest the patterns on each pair. Like I really backtested on most of them, so I can see them. You know, I can see the pattern. It becomes second nature, like Mark says. It just becomes ordinary second nature. So this you see, you could have entered here, but you're gonna be taken out here also. But now keep in mind, this is the Falcon flag, so we can either call it a Falcon flag or slash expanding flag also. So now on this one, it's either you enter back here again and then you target. So now you target, boom, all the way to the, like I said, here, because you know it broke out here. Now you're targeting this low here, you're targeting the start of that pattern. So here, so it's either you enter here or here. So this is a reduced risk, this is a risk entry, then here another one because we're impulse correction, then here you enter here reduce risk, and then pow, the market does its thing, so now we are in these whole corrective. Let me just zoom in a bit. You always, like Mark says, you always don't want to be zooming. So sharp. Now let's see what happened during these moves. I don't want to be long on this page, just want to touch out quickly. So what happened? We had this whole impulse correction, impulse down on the downside. But now you remember, we also have like a double top kind of structure here. So I'll just put it here. Let me just put it here. But the reason why I'm saying this also is because it's the second touch to our trend line. Second touch. It's the second touch to our trend line. So we confirmed the second touch here. So what the market did, you see this, did an impulse correction, impulse correction, impulse correction, then we had an impulse, and then it formed this. But now you see, this is one impulsive move, and then a correction, a bigger or a larger correction. Then we had an impulse correction, impulse correction. So many entry opportunities on this pair. Now this is what we call what do we call this? The market broke out of our larger correction. We're targeting to the upside. Now we are in the correction phase, but now what are we looking for? Because now we know the market is impulsive. We are here, we break. If we form our corrective pattern, 2 touches, most if your pattern is 2 touches, then that's enough, it's valid. Let me just retrace this. It's valid. So one thing what you need to know is how to draw your patterns. I'll draw it something like this. I'll just draw it something like this, because you know why? It's an expanding also. I'll just say here's a bullish expanding flag. So now let me just draw the other flags also, the ones I'm seeing here, the most obvious ones. I'll only draw one. You see, 1, 2, 2 touches, and then here we had another here, we had another here, another here, another here, another here. See how the market is moving, and then we sorry guys, sorry. Then we had another here. So this one would be drawn something like this, another here. Then we had this one also. So these are kind of the steeper flags. Is another one here. There are a lot, guys. Entry opportunities. Imagine how many opportunities you would have scaled into this. You would have entered it probably here, since you just like your better confirmation. If you would have noticed that it's a second touch on this impulse correction, you would have entered here, pow, stop loss somewhere here, and then you have 1, 2, 3, but it will come back at your entry here. So you have already 3 entries, and then you have 1 here again, and then here almost like 6 entries. So now what we're waiting for in this market. So what I want to see on this, now I'm giving you like a forecast for next week. What I want to see on this, or what I want to see on this next week is, I want to see either, let me say, a move like this. Let me draw it, let me keep it here. So this is what you call a bars, pulls, whatever. What is this pattern's name? Okay, we call it a bars pattern. So you just copy the movement of the other. So what I want to see is something. It's either, I want to see something like this. I want to see something like this, and then I will take it here on the break, keep it here 23 pips for this one now, and then I target, like I said, where do we target? Here we target. So we have a possible move of 257.5 pips. This is a risk to reward ratio of 11.2. Who wouldn't want to be in this trade? You see, so this is just one of the trades you would have been looking into for next week, possibly also. So we want to look into this pair. We'll look. This will be one pair on our, what do you call this, on our watch list for next week, to be one of our favorite pair for on our watch list next week. So now we go to I'll go to EU. I'll go no I'll start with his. I'll go to EU and then show you, and then we go to GU, and then we go to Nasdaq. So Nasdaq will be our last pair. So now we go to EU. Let me just search it here, because I don't want to have to open and then look at. So I already flagged my things. So I'll just enter here, and then I'll go back on the 1 month. So I show you how I anticipated that beautiful fall to the downside and my possible targets. So okay, so let's do this. So I'll remove all the drawings. So what can we see from this market? Already you have to, it's a reasoning game. You have to ask yourself, what can I see? So I can say this is impulse, and then I did correction here, and then I did impulse, and then I did correction here, something like correction, and I impulse, and then I can call this a correction also, you see, because it's an impulse correction. And how do you know how do you know the market is correct? So look at this. Like the other traders say, call it, I hope I'm correct on this one. So the market is, it's clearly, the nature is saying we are going down, bro. This is a bearish market. It's a bearish market. 90% of this, 90% of the candle movement here is bearish. You can see it, I can see it, everyone can see it. So we know nature is bearish. So we can, what do they, wait, let me undo Z quickly. What do they call them? So this is a higher low, a lower low, a higher low, a lower low, a higher low. It didn't break these. So this is what the other traders say. It didn't break our previous higher low. Now we're targeting this low. Targeting this low here. So we're gonna, here, the target is this. Monthly target is done. We know the market will be coming down here. So we draw our other pattern, our monthly pattern, because we know this is an impulse, and then because we know this is an impulse here, and then we had a correction here. So now we're looking market to move downwards. So we mark it here, and then we do this. We mark it. Oh, sorry. Then we mark it here again. Beautiful. Yes, we mark it here. Mark it here. Make it here. Someone will say, yes, this is an impulsive move. Yes, impulsive move, but what is the nature telling you of the market? And you will see here in this area here that the market leaves you signs to show you. So we go on our weekly, we know where the market direction is headed to. So if you go on the weekly, I think it's early January or somewhere. Yes, early January, Feb, somewhere there. We knew the market. You see, this was Feb. This was January 26. It started January 26. So now you know the market is here on this beautiful move here. Here, you see this. I don't know, should I remove this trend line? Let me just move it upwards so we have a better picture of view of what we working with. So we know this market was a whole impulsive. You see, you could see now this is the kind of corrective market I will trade. This is the one I will trade. Because why? We're in impulse. Nice beautiful correction here. We did an impulse here, and then now what are we looking for? One market to come down here. So now what can we see? Always, like I said, the market moves impulse correction in 3 waves: impulse, correction, impulse, no matter what. So this is a whole reversal pattern. Why? We have 1, 2 here, 1, 2, and then we have what? Our impulse, then we have a correction, and then pow. And then here, remember what I said, we within impulses we have correction. So this is an impulse correction, impulse correction, impulse correction. See this? So what you need to know is that some impulses will take much longer than others. You see, compared to, imagine this impulse here. No, I mean corrections. Some corrections will take much longer than other corrections. Compare this correction here to this correction here. Compare this correction here to these corrections within the impulse phases, within the impulsive move. So keep in mind, like I said, impulse, correction, impulse, and then within. So this is what you're saying, an impulsive move. 90%, like I said, 90%. 90% of the move. This is the safest place we can go out, like out of a trade. It's the safest place, because you never know, what if the market comes here. So the market can come here, but it can move, let's say it moves something like this, something like this, something, okay, I think I draw too much, something like this, and then it does this, and then it does this. So let me edit it here. Yes, something like this. If the market does this, if the market does this to me, I wouldn't, you see this, I know now we're going to the downside, but now I don't want to be locked, like too zoomed into the market, you see, because now imagine if you wouldn't have taken out your profits at this zone here, you would have, yes, you're anticipating, no, the market must come here. We don't control how the market moves, we just get the information from the market and play along with the market. So the market decide to do this. So now you know, we have a sign that no, this is a reversal. Now we have a reversal pattern, we headed back to the upside. Same way you target here 90% if the market was going to move that way. Target here. This is forecasting, guys. Beautiful and easy things. So now we just target our 90% for now, but we will see, because the market will always give you signs what's gonna happen in the next move. So now we know. Let me just clear this. Okay, let me just delete this. Let me just delete this. Let me just delete. So now we know we have an impulse correction and then an impulse here. Within the impulse, now we go on the daily. We know we know that no AU is daily. Now we go on daily. Is bearish. I mean, sorry. Now we go on the daily chart pattern. So what I was targeting. So what I saw on the daily pattern, I saw this move. I didn't take the trade on this pair, but I took the trade on GU, because I prefer GU moves, and when it moves, I know this pair moves, but I just prefer GU because GU moves. Genuinely, GU moves rather than EU. I prefer GU. So let's go. So we had an impulse here with a correction here. Then look at this. This is another pattern here. If you study the patterns that a part of the Falcon FX, you will know what I'm talking about, because now you can say this is an impulse correction, then we have another impulse here. So like I said, this on the weekly is just one impulsive move, but like I was saying, within an impulse move you have corrective, so you have corrections. So this is impulse, correction, impulse, correction, impulse, correction, impulse. You don't have to go against the market. Like I said, they are going to be like, corrections are not the same. Some corrections will take longer than others. Look at this and then look at this. They are both corrections, but look at this and then look at this. This one is much larger than this one. How many can do this? 1, 2, 3, 4, 5, 6, 7. These are 7 days, and then these are they're a lot. I would say even maybe 10, 11 days or something before the move plays out. And look at that. So what I had drawn on was here, because I remember what I drew. Sorry guys, I'm doing any more sense. I don't do the English thing. The English thing's nicely probably. So this is what I had on the daily, and I told the guys on the WhatsApp group that this is what I'm seeing on EU. We're gonna see heavy momentum sells. So if you don't want to hold your trades, you see, like I said, the 90% rule still plays out. If you don't want to hold your trades, you can still target this and then get out. But now I know that from the daily time frame, we broke out of this pattern here. So I'm not gonna take out my trade here. Yes, I'll move my stop loss once we are there, but I'm not gonna take it out there. I'm not gonna close my position there or put my take profit there. I'm gonna put it on the larger, based on the larger pattern which I already analyzed on the other larger time frame. Yes. So what happened is this was Tuesday, and then this was Wednesday, and then Thursday was yesterday. So what happened is I did this on Monday, no, on Sunday during during my market reviews. Like I mostly do that and decide what I'm gonna focus on the week. So on Monday I saw the market. Okay, Monday it was bearish on the daily. It came here. So I was like, okay, fine. I'm only gonna consider this move if it breaks out of this pattern. So on Wednesday it formed this candle. I could have entered here, but I was like, no, I'm not gonna enter it because it's not clear. Because I'll show you why I prefer GU. I'll show, and then I was like, it's not clear, so I'm gonna wait for it to break out. Because if it break, I would have been into this and then entered myself. I would have been taken out long time. Look at this. Look at on the Wednesday. Look at on Thursday what it did. Imagine I entered here based on this. I'm saying yes, and then I would have been taken out here. Bow, you're out. So I would have waited for this break and then entered on the close, and then put my stop loss above the previous daily candles opening, or not opening, but here. Let me say you would have put it here like target 57 something pips, and then sorry guys, let's say here, because you're gonna get opportunities down there, and then I know you're not gonna do something like this because you get better precise 38 or something, then you put it here. But now look at that, you have this whole space to target to the downside, and you just want to keep it there. Those are 321 pips. You want to leave it for who? The market? No, we're not doing that. We are enjoying every pip counts, guys. I'll keep on, like, every pip counts. So now we're here, we have an impulse. So this is just a corrective phase, so we're just going to consider it's a corrective phase. So the market broke out here. This is when I knew that EU is gonna fall, like it's gonna fall. I told the guys on the WhatsApp group, EU is gonna fall. EU is gonna fall. You see? So now look what EU is doing. Look what EU is doing. So now we go on not on an hour but on a 4-hour time frame. Yes. So yes, this is what I saw on the 1 hour. The 1 hour. The 1 hour. So you see? Yes. So yeah, this is what I had on my before this whole move happened to the downside. So guys, if you follow Falcon FX, you know that they have the mechanics, because there's a foundation series. So what I know best is the foundation series. You know that the foundation series, that's the one I know. So the mechanics, almost the same concept, not almost, but it is the same concept. The only difference is that you focus now on more on your value areas and all that in the mechanics. So these would have been a value area, because why am I saying it's a value area? Because why? It causes it brought about this move here. It brought about this move here, and then came back here. It was taken out and then boom to the downside. But like I said, I'm a foundation. I trade the foundation basic strategy of it. So I had to wait for the market to break here, to break out of this pattern. But now I noticed that no, okay, fine, the market is giving me this. It was supposed to break out, but it's giving me this. So like a normal person, I started the strategy. I know the patterns. I just did this. I did this because who am I to fight against the market? I did this. One thing I saw like, ooh, expanding. You will know why I'm doing this once you get into the strategy much deeper than I was like, oh, expanding. So you could say you also have another pattern here to take you to the downside. So the concept of patterns within patterns is very important because it shows you exactly how the market plays. Because you would have, let me say this also, this one here, you would have seen it something like this, you'll be like you would have been, yeah, something like this, impulse correction, impulse to the downside. You would have been something like this. But now you go on the 1 hour, you see this 1 hour, call this an expanding channel straight. This is clearly an expanding channel, but I had to wait for the market to give me a clear a clear sign that no, we're going to the downside, boss. We are headed to the downside, big boss. So what big boss did, big boss waited, but big boss did not take this trade. Why? Big boss was happy on GU. All it takes is one setup to make you money. I don't have to jump back into this pair because I'm already in GU, and GU is making me money. You see where this impulse, another what? I would say this is also an expanding, not genuine, or expanding or running channel, but with this here breakout here, So yeah, like I was saying, with that impulse correction move here. So now with this one, impulse then correction here. So, but the market was very choppy. I hated these moves here. This is why I don't like EU, because it's very. So what I do is I ignore things like this. What is this? I ignore this kind of movement because I don't want to. Now I must bring my trend line here. No, I'm gonna bring it here. Yeah, here. I'm gonna bring it there. Yes. So now see it's not even closed. This is 1 hour here today, Friday 19. Market did this. This is Friday 16, Friday 3:15, Friday okay 2:12 and all that. So this happened on Thursday. This was the whole Thursday move. Impulse. Correct it. Now we're targeting to the downside. If you're a day trader, you would have I would have entered either here. I would have entered here. Target here. Because I'm a day trader now. And then my peeps all have left it on this. Yeah, probably here. Then I'll have got 3 to 3.6. 3.6 reward ratio. But I won't target there because like I said, why now will I target there if I have a whole area to target? This is now where I can swing the market. Look at that. I can swing the market down here. 16.59 unrealistic risk to reward ratios, but I'm not gonna do that. So yes, so we're gonna leave it there. So my anticipations for EU, we're headed down. EU is headed downwards, and target. So this can be, we can say this TP1. Let me go back on the daily, one day channel, 1 day time frame. So we can say TP1, TP2. So irregardless what the market does, let's say the market does this, broke out nicely, and then it started doing this. The market started doing this. The market started doing something like this. No, like this. A whole big corrective. I'm like, I won't panic because you know why? I know the nature of the market, because the market is going down. The market is going down, boss. It's going down. It's going down. This is what I'll look for in the market. Oh, sorry. This is the market will be going down because even if it gives me a big correction here, I'll be like, okay, sure, market gave me correction, but now overall move, we are in our correction move here, We are going down, guys. Just keep that in mind. We are going down, 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 down. We're going down, down. TP. So TP1 and TP2. Then we go GU. Let me put it there. I don't want to make this long. I just want to keep this short. I don't want to make this long. I just want to keep it short. That's a bar. That's a bar, guys. I don't want to make this long. I just want to keep this short. If I was a musician, though, let me just put it something like. Because why is it not bringing my? So I'm gonna. So these were my markings. My markings on the pair. So I'm gonna remove all this so we run it through together quickly. So I'm still gonna focus on these three pairs on the monthly, no, on the upcoming week. Yeah, I'll deposit on XNES and then we grow it together. Then we see how best we can do by end of Friday, because I'll need the money by Friday. Hopefully I'll make more money. So we're gonna go on the monthly time frame. In the monthly time frame. So if you noticed on EU, we had the same movement, almost the same. You see this EU and GU almost move the same price action, because EU is just the euro, and I mean E is for the euro and the G is for the Great Britain pound or whatever they call it. Yes, so it's pound, and these things are almost just related. Oh, how I wish I was here when this thing fell here in the 2008 crash. How I wish I was here, because you know why I like the Falcon strategy, guys. I'm not gonna lie. Look at these. Imagine you are in 2000 and what is this? 2000 and 2007. Let's say 2007. You are happy. 2007. I'm happy. Another time I'm very happy. I'm like chilling on 2007. I'm not. And one thing about me, I'm not saying you won't make money out of other strategies. Yes, you will make, but when you choose a strategy, you have to choose one that is suitable for you. Yes, I feel for me, this personally is this one. Now imagine 2007. You are chilled and relaxed as a Falcon trader. You are here. You analyze your market. You like, I'm seeing my patterns. They are forming up nicely. You already know that no, market is bullish, market is bearish on that. Beautiful things. Look at that. Patterns within patterns. Everything is formed. You are positioned. Yeah? You are there. You know people are panicking. They don't know. They'll be like, hey, impulse, correct. You'll be like, yes, market is. No, you are relaxed. You after your first correction. You see, now this is what I'm saying, reduce risk. Because you see, you had the break and then you had the correction. In the moment you see the market breaks out of your pattern and then it does its first correction, I'm telling you, it's gonna play out. It will play out. So now you're in your what is this? What do you call this? Impulse correction, impulse here. Now it's either you enter here because you're a Falcon trader. You're a Falcon trader, so you know good. So we're gonna have unrealistic stop losses on the monthly because we're on the monthly time frame. So and then you target here. You target there. Why? Because it's the 90%, the 90% rule. And why am I saying target there? Because you would have been happy already if the market was gonna come here. Here, you're gonna be happy already. 2,900, 2,800 and something pips, 7.9 R. But now your stop loss will be based on the lower time frames. You are enjoying here. 7.4, 7 point what, you are enjoying all this move would have made people mad. Yeah, I wish I knew trading in 2008, but 2008 I was studying with I was grade, I was not even grade 1, I was like pre-primary and something like that, and now I'm in varsity. So just imagine I would have made money from here. So we had that impulsive move, then correction here, then we had an impulsive move. But like I said, remember, within an impulsive move there are corrections. So look this: impulse, correction, impulse, correction, impulse, then we get a small correction, impulse. But we keep in mind that the nature is still bearish. But what is it telling us? This is our impulsive move. We're not going to change because now I see impulse and then, okay, the market does a correction here. Now it's giving me signs of going up. And then now I panic. And then now I'm entering buys. No, we don't do that. Because why? I know the market is coming from a corrective phase in the on the higher time frame. So I know it's gonna go down. Look, guys. You guys can say what, ne? But I'm just gonna stick on this strategy. I'm gonna stick on this beautiful strategy here. Here, look. So now we have this. The market the market will always give you signs. So now this is a reversal channel here. This is a reversal channel. This one, a reversal pattern. Look at this. Ooh, you are caught. You enter again here. You enter here at the top again. It's like you're kindly repeating the 2008 crash, but this time in 2014. If only I knew also in 2014, but 2014 I was great. 6 or something. You see this? You would have 300 and something pips. But now you would have just held that rate because why? You are going in, you are here. You are targeting here at the low of 2016. If only I was awake that time, I was also grade 8, something there. You see this? Move, beautiful. You have multiple entries here. Target to the downside, 90%. Like I said, 90% rule. Enjoy your money, you're out. Come back. The moment the market tries to come back, your stop loss is set, you're out. Done. Now you know that there's another corrective move here. Correction, impulse. Now you have this. So now you know you are coming from an impulsive move. What do you see there? You look for an impulse, you look for a correction. Obviously, we are in a corrective move on the daily. You see? And why I did this is because the market gave me this. I know the market touched our 39, 1, 2, so I have 1, 2 here, and then here also we got this. So Mark says this sometimes this can be considered as a double top. A double top on a larger time frame, but that's not my cup of tea, so I'm just gonna leave it there. So this market confused people here. I'm not gonna lie, here this area confused a lot of people. A lot of people were confused on this, but now on my other thought, because I won't neglect the other analysis, the opposite analysis of what I choose the direction of the market is going, because I can clearly say this is an impulse correction, impulse to the upside, but I remember that no, the market gave me this. The overall direction of the market is bullish. So, and I'm gonna wait for the market until the market show me signs on the lower time frame that no, we hit our trend line here on the third touch and we're gonna go up, as long as this trend line of mine is not broken here. So if it breaks and does a correction, we're gonna target this 2022 November low, which is how many pips? Let me calculate let me see the pips with the short. So here, let's say if it breaks out, and then we're gonna target, if it breaks out, we're gonna target 2077 pips. Yes, so that's what you're gonna target. Yes, so we're gonna target here. But if the market doesn't do that, so we'll have I will consider this as an impulse correction, and then it does its thing, breakout. I'm gonna target here. I'm gonna target here. So I'll be entering if it does its thing on the third touch. I'll wait for it to do something else, and then we're gonna have 1139 pips, but now overall focus, we know it's bearish. We're not gonna worry about bullish, but we just keep in mind that of the bullish. So like I said, I incorporate this with the double Willis strategy. So Forex mastery strategy. So we're gonna keep this according to double. This is a zone. Yes, this is our zone here, but now this zone has to accommodate everyone. So yes, so this can be our zone. Market came here, but no, it's not. Okay, this is better accommodated. We accommodated this, the many touches. So this is what I saw. Yes, I anticipate the market is gonna buy also, but now it's not done. It's just not done. The market, it's still corrective. We're gonna draw that. We're not gonna neglect the corrective phase. So As we stand, can be my analysis. These are my analysis. I want the market to come here, touch the third touch, and give me it either, if it's truly bullish, it will give me a third touch here and then go to the upside here, something like, it will give me something like this here and then go to the upside. If not, if not, if not, it will give me, something like these impulsively, and I'm only going to look for moves that are going to be impulsively, and then give me my correction, something small, and then before it goes down, this is what I'm going to target. This is what I'm going to look for. You see this? But now what I saw on GU, let me tell you a story. So on GU, this is what I was looking at. This is what I was looking at. Let me take out this pattern, this trend line. I'll move it down. This is what I was looking at. This whole, let me move this one also, because I just feel like it's kind of confusing, but we keep it in mind. So this is what I was looking at. It's like, yes, the market is out, it's impulse correction, but yes, now it's impulse. We have 1 2, but remember this, we're looking for the third touch to the downside, to the what, to the downside. So now we have this. I'll do this. In the same time, we had this kind of move here, with this kind of move, pattern within patterns. Yes. So I think I drew something like this, like I drew something like this, but yes, but something that made me like change my bias on this was like, okay, because my first initial thing was like, okay, we are bullish, the market will move bullish, like we'll move to the upside. And then I was like, okay, sharp, the market will move to the upside, but remember this trend line, if I put it back, I only 2 touches, sharp. So now, in the one rule I know about trend lines is that when what was this getting here? Okay, this kind of a move, when I have 1 2 touches, I'm looking for the third touch. So this market did the same, 1 2. Now we're gonna look for the third touch here. We have 1 2, so we're looking for the third touch down here. So that's when I decided, nope, the market is gonna go down, because we had our second touch here, but we didn't have our third touch. So we're gonna have our third touch before it goes up. That's how I decided, okay, sharp, now we're going down here. Even though I traded here, I made here you could have traded also, because why? Remember, patterns within patterns. What I did was, yes, the market did this. Patterns within patterns. And in Falcon FX, you trade everywhere. Every place is a trading opportunity. Yes, you see this. Let me go on the daily so I show you guys. But overall target were bullish. You see this. Yeah. You see this. See, yeah, patterns within patterns. I know it looks kind of messy right now, but you understand what I mean by that. So we had a whole flag here, and then here I would have targeted here to the top 90%, but what I know is that the market didn't break out. Yes, it broke out and came back, but look, always ask yourself, how did the market break out? What is the market telling me? Yes, the market broke out but came back. Look at this. If you know the patterns, you will know what I'm talking about. So I just did this, and then I was like, okay, sharp, it's a valid pattern. And then it came back. I know I'm just forcing things here, but it's the most logical part where I can put the trend line, or I can put it here. You see, that's when I realized after the market failed, it came back inside here into this trend line. I was like, sharp, I see this pattern. I was just ignorant of it. I see it came back here, and then I drew my trend line of this one, like 1 2 3 touch. I know this. Mark always speaks about this pattern, the 1 2 3 pattern. So I was like, sharp, and then I waited for it. I think I entered somewhere here on the daily, no, on the I think it's on the 15 minute, because it gave me a clear direction that no, we are headed to the downside. So I went on the 4 hour, came on the 4 hour, and then I was like, sharp. You see on the 4 hour? Because one thing, what I did on the 4 hour, let me show you quickly. Let me delete this trend line, but no, let me just draw it quickly. So on this trend line, I drew something like, it was something like this, because I didn't want to force it. I didn't want to force the pattern, because you don't force the pattern, just draw where it's most, yeah, where it makes sense. So I drew something like this, and I was like, sharp, this is the pattern, we're going down. But now at the same time, I was like, what if it's just a correction? It's a whole impulsive move, correction. And then I also, now with the double wheel list, like I said, always you look at your zones. So what I did was I drew my zone here, because I feel I like, no, this was a valid zone, so I drew my zone here. I was like, I'll probably see the market here. But now this is a short term. And I was like, okay, nah, I didn't trade this. I didn't trade this one, because the market just did this. And then I was like, market came back. And then we had this correction impulse. That's when I was like, okay, now this is what we're gonna do. We're going bearish. But what we're gonna do, if the market breaks out this trend line, that's when we're only going to enter. So I waited for this impulse correction, impulse move to happen. And guess what happened? The market did that, and then I did this. And I also sent it on the group. So my first target was somewhere here, but now, as I know, overall target was here. These are 283 pips. But remember what I said. Third touch on this pair. So the third touch is gonna be, let me go back on the daily. We're looking for the third touch of this whole pair. So it's either we're waiting for the third touch either on this here, something like that. So I want to see a touch here, either on this trend line, and then bouncing back. The market will give me signs. So if it gives me something like this, see, let me see, the market gives me signs like this. Here. See how it moved? You see that? It gives me signs here, like this. It gives like this. Oh, sorry. Let me undo this. The market does this to me. As a normal person, me, who studied Falcon FX, I'll do this. I'm like, you market, you're trying me. I know you. I studied you. I know you. And then I wait. I'm going to the upside. I am going to the upside, because what? I have my third touch here on this other trend line, so I'm going to the upside. Pattern is complete. Descending channel. I'm going to the upside. I will either enter here, because I know within this there's also a descending channel, and this was the same thing happened here. I'll take you down now, and then came up here. So this is what I'm saying. The market will always give you sign, but overall we are targeting here. So we're just gonna keep either there 475 pips, or we're gonna keep it here, which is 288 pips. And currently that's what happened. So this was the day yesterday's movement, and then that's what happened. So this whole week we were bearish. Let me go back on did I say 4? Sorry, I'm on the free trial, guys, so sorry. Let me go back on the 4 hour, like this. So what I intended to do, and like I said, impulse correction, guys, remember that. And I also did somewhere here, I was like, no, this is a zone. You see, yes, this is a zone, and I respect Double Willie. I respect him as a person and as a trader also. The strategy works. I'm not gonna lie, his strategy works. That's what I'm saying. Strategy which is suitable for you. No one should enforce a strategy on you. So support and resistance. This would have been our zone also. Would have been, and for him we would have draw something like this, and like sharp, it touched our trend line here and then came back. So now we know we are bearish. This is basically based on double wheel strategy. This is what I know. This is what I picked up here. Market, this is in our zone. Market is gonna go back here. You can even move it here just to accommodate everyone, like you want to say even this and this and this. But now me as a fully fledged Falcon trader, what I know is I had an impulse correction impulse. So I'm gonna look for market to move down. I can just draw this here and then go see, and then I know this is a correction, so I'm gonna look for on the 1 hour. So next week, come next week, because I know this market is gonna close soon, because today is Friday. So I'm just gonna fund my account for next week. So probably 200 ZAR, and then wait for the market to give me my chances of entering. And I'm only gonna stick to my analysis clearly that then I target. I'm gonna enter, like when it bleeds, I'm going to enter. Yes. See, so this is what happened. This is what happened, because I know I entered here. Exactly, I entered here. This is where I entered. Let me delete that. So this is where I entered, and I entered. Why? Because on the 15 minute gave me a clear entry. Why did I enter in the 15 minute? Because on the 15 minute, in this 1 hour candle, it broke out, and that's why I entered. So I entered this, cell, and I placed my stop loss here, which was like 27. So I entered here, something there, and then I targeted. So I just targeted here first, but I didn't go out because I just closed my trade. I think I closed them here on this 72.8 pips. Yeah, this is where I closed it. I closed it manually because why? I panicked. Not that I panicked, but yes, I think I panicked. Honestly speaking, I just panicked. I didn't anticipate it, the thing, because I thought the market is gonna do this. It's gonna respect these this area here, the area which I thought was actually because that's where I placed it first. And I was like, no, the market will respect this. But wait, I just panicked, you know, I just panicked stupidly. So market did this. This was not yesterday. Guess what? The market did this. This was yesterday, and that's when I knew. It's like, oh, yesterday, Thursday, 8 o'clock, Thursday, 8 o'clock, 9 o'clock, the market decided to do this. So imagine if you would have entered this trade from 8 to 5 p.m. Money was made, and we're gonna keep it here. Also, we're gonna keep it here. So it's either it's 60 pips, 60 pips, 60 pips. Sorry guys for the noise in the background. Those are my blockmates making noise. So we're gonna take it. I'm gonna target this. Like, so till Friday. This is the move I'm gonna target. Till when? Like I said, till Friday. 161 pips. This is what you're gonna target. But we're not gonna make it like 63 stop loss. No. Because why? We're gonna go on the 1 hour. We're gonna go on the 1 hour, and then it will give us signs on what's happening. But what we will keep in our head, we are going down, colleagues. Nothing is gonna confuse us here. Nothing. This is what we're gonna aim for. This whole move, we're gonna aim for this. Nothing should confuse us. No, not even one simple bullish candle, and then now we panicked. No, nothing is gonna change our movement to the upside. Let me do this. Sorry guys. Let me do this. Let me just enter the full window. I think I'm in it. I just don't know why this thing is still showing. Because I exited. Okay, I think I am in it. Yes. Thank you. Now see? Now much better. The view is even better. Yes. Now we're just gonna wait for it. And then bah! Targeting this. You see this area. And remember, KC trades or YenomFX or Kelvin, or just call me KC. By the way, I prefer being called KC. Called this move. I called it. You know. So we're gonna target the 1.31416 area here. So let me edit text. Where's my text thing? I removed it. It used to be here on my thing, but it's fine. So we just know that we're gonna target this. We're gonna do it there. So gonna go under 15. So for next week, this is what I know. This is what I'm gonna look for. I know this move won't play out now, but this is what I'm gonna look for. Monday, come Monday. I do not care. People say do not trade on Monday. I am trading on Monday. Yes, I'll enter one position 0.04 because it's the 200 ZAR account, and I know my XNES account will surface, or yes, for me that one. Is it this? Imagine entering here, and then yes, you would have made your profit, but now the market comes back here, you panic because the market. Guess what the market's gonna do? It's gonna do this. Guess what the market is gonna do to you now? The market, it does it. It did this, and then it did this, and then it did this. Now it's gonna come back here. Bah, you're out. Break even. You're out again. No, no, no. We're not doing that. Not everything should be out at break even. So I'm gonna wait for that. Either a clear break here on the 15-minute, and then I wanna see a nice, yeah. This is what I wanna see. So we are bearish on the GU. So now let's go on the MA. Let's go on Nasdaq. Oh, I think it's here. Also, I need to put it here. Or what is the one I did? I like the one I flagged because I don't like these ones. Oh, and because I like you see, we use NAS. Where was it? It was somewhere here. Oh, and you see, this is one thing I did. I actually analyzed on the, okay, this is my on the monthly time frame. You know, the thing of Nasdaq, it does its thing, guys. Imagine if you were in 2009 and you entered here. Obviously, you would have targeted here, here, you would have targeted here. 11, you're out. But now, imagine if you would have held this from here, 2009, all the way to here. Oh, guys, you know the market for Nasdaq is bullish, but the day it decides to fall, guys, oh, I'm waiting for it. I'll be patiently waiting for it. Hopefully, it falls. You see? So yeah, let's just wait for that. I'm just gonna draw the 10 line here. So this is our monthly trend line. So if it happens to break this other inner trend line, I want to see it come to the downside here and then touch our monthly trend line. And remember what, like, always look at this, because you know what, the corrections on the what do you call this, on the on us always are more, they're not like they're not like the bullish momentum, because it's always, it moves, guys. Look at this moment, look at that correction. Pow, it moves. But now we're in, so now let's focus on our inner trend line. So it's either we're gonna wait for the market to come here, third touch, and then to the upside, or break down to the third touch correction, and then it breaks, it comes here. So we're just gonna leave it there, you know. I'm just gonna show you right now. Let me just delete something. Okay, so on the daily, let me just clear from here. Let me just clear here everything on the daily here, and I'll show you. Okay, let me just show you from here, because I don't want to redraw now everything, because this is our last pair. So Okay, this is what we know: impulse, correction, impulse. No, now what phase are we in? We're in our corrective phase. So I wanna see something here. I wanna see something like this. So I wanna see something. Let me say it happened however it happened here, here, and then back to the upside. Same way it happened. So this is what basically this is what I wanna see. Basically this is what I wanna see. Sharp. So now we go to the daily, because on the weekly I know we're going to the downside. And how did I know that the market was going down? Basically, so sharp. What the market did gave me this. This is where I chose from the market form. I will draw it from here. Let me just draw it from here because it makes sense for me. Like I said, for me, the market did this. Gave me this. This. That's why I like, oh, okay, it broke out, but it didn't. Never came back here. I was like, sharp. Did had the gap opening here. Now it's like, cool. Market had an impulse, a correction, impulse. So I can say this had an corrective phase and an impulse. So here I was a bit confused because you know why? What I first thing I drew was something. I think it was something like this. I think I had something like this. Yes, I think I had something like this. And then when the market came before this, so I had this, and then targeting here. But I initially went back and then looked, and I was like, no, the market is going down. So when I drew this, when it came here, I also thought, no, it's going up. Now it's changing momentum to the upside. But I was like, no, no, no. Remember where we headed? We headed for the third touch. So I went on the 4-hour. When I came to the 4-hour, that's when things got a little bit clear. Now that's when I started seeing, no, this market is bearish. It's bearish. We're not gonna lie. Look, higher low, lower low, higher low, lower low, higher low, lower low. And then so when it came here, that's when I saw, because it touched here. Now I was like, okay, probably we're gonna go to the upside. But then I remembered it didn't. As long as our lower high or our higher low is not broken, the market is still bearish. So I decided, okay, and I'm seeing an impulse correction, so this is what we're gonna play with. This is what we're gonna play with, because this before this happened, I had this. I just had this. I just had this. And when I'm seeing what I'm seeing on XNAS, there's now two Nasdaqs. One is very volatile like gold, and then there's the other one, the usual traditional one, which I know that one is quite fine because you make money. The other one is volatile like the step index and all those things. One simple move, 15 move, 3 candles can make you thousands, you know. So I'll try that once I double my account, maybe to 2000 and something, and then I'll try that because I'll risk a whole 500 on that one thing. Then I'll just enter with a 0.1 on that, but I'll only trade Nasdaq. So this is what I saw. I was like, oh, okay, this Wednesday, on Wednesday, I'll show you again what I saw here also in this Wednesday before, because it happened here Monday and then to Wednesday. Then Wednesday I'll show you what I actually saw on the 1 hour. So I saw this move, it played out. Then we saw this, then we saw this. It's like, oh really? Let me show you Louis V. And when I analyze, guys, I listen to Ghana. I don't know about you guys. I listen to Ghana's music when I analyze because I feel like it plays it syncs with my brain, seeing more clear things and all that. So sorry once more. So yeah. So what happened? I saw this. This is what happened. Yes, the market did this and then this, but now yes, we are corrective, and then it will always give you when you're in a corrective pattern or something, it will always give you signs. Signs will be there. So as Namibians, we like saying signs will be there. So this, let me just cut out that long S candle there and bring it within the other candle. I can cut that one also and then bring it here within this, because now it makes sense. Or here's something like that. Let me see, something like that, because now it makes sense. So we see when the market did that. So it hit an impulse correction, impulse. Now it's like sharp. Now I'm seeing things. So when it did this, and then I saw this. I saw this. I was like, you can enter here. You see, but I didn't enter these trades because I didn't have I was focused on my GU trades, but I had my analysis on this, like you saw previously. It was going to the downside. You see, all this target the what? The beginning of the pattern. Look at that, 3.0 pips. I'm raised to the ratio. You are sorted. You are sorted. You are out. You don't have to. Yes, you can be out here. You bring your stop loss at your entry. I would have been out already by this one, because why? I don't wanna this whole mess to play with my brain. Because now the thing of a corrective, when the market is correcting, you start to panic because now you're seeing all your profits are going away. Imagine you're here, one position was like 1,000 ZAR. All of a sudden the market corrects, you're here. Now you are back at 200 ZAR. 200 ZAR. You would want to close, obviously, because you are thinking, no, what if the market comes here? Now that's when the brain start playing with your head also. Apparently the brain start playing with your head. Now that's when the market start playing with your brain, because now you start panicking and being like, no, what if the market comes back to my entry and then I lose and then kicks takes me out my stop loss and then now I don't have anything. So now you start closing your positions unnecessary. But now what I do is I trade my stop loss. My stop loss would have been here. You see this? But then I would have been out already here. You see this? So in this thing, I'll bring it here by break even. So, and then just chill. Because either way, I'm not making a loss. Either way, my money is still protected. But now let's just leave it there. Bring it back here, right into this one. So we had this move. Okay, and then we had this. And then we had this. See, impulse correction, impulse correction, impulse. You see this? Guys, beautiful things, man. This is all I'm saying. Beautiful things. But yes, so guys, this is what I wanted to show you guys on my whole analysis, and I'll be dropping down the my weekly breakdown on different kind of pairs. But these are the pairs that I'll be focusing on next week, because I do not need a lot of pairs. All I need is one setup to make a lot of money. You know, I do not need 8 setups on one pair, on 10 pairs or 10 setups or 8 setups. I do not need 8 setups on 8 pairs to make money. All you need is one good setup on one pair to make money, and focus on that one. Rather than now you're focusing on 5. Yes, the setups are fine, but you have to choose which one is high. You have to choose between all your setups, your very high quality setups, and never judge and never doubt your instincts. Always go with your instincts. That's one thing I do. I always go with my instincts. Yes, and so I'll be depositing on, I think, Monday. I'll just have to do my finances and calculate everything that I have to buy and do, and then that's when I will trade the market. So yes, guys, so I'll be focusing on these 3 pairs, delete all the other pairs, and then look I'll also look into them, especially um pound pound Swiss. It's also moving beautifully. Euro AUD, it's also moving beautifully. So those are the pairs I'll be focusing on. And like I said, my name is Kelvin. I'm starting this channel to post my weekly and my monthly market breakdown to show you guys how I trade, to show you guys on how you can trade also if you are comfortable with the strategies, showing you the ins and tips of the pros and cons, what to do, what not to do, what to follow, yes. And I will be posting my losses here also, because this will help me learn as a trader, as I can as I can as I can view, or I can review back on my mistakes and learn more on what mistakes not to repeat, and like one person that truly inspired me in the forex space is Mark and Abby. I'm not gonna lie, especially I know Mark is the founder of Falcon, but I'm more of an Abby fan. Yes, I'm a fan of Abby. And one thing is, I didn't pay for the Falcon mentorship strategy. I didn't pay for that. Unfortunately, in the country where I am, I can't afford the monthly subscription for Falcon. So I'm not gonna lie. So what I did is I started following Falcon since I was grade 8 or something. Not grade 8, but I think grade 10 to 11. That's when I got introduced to Forex, because we had a place where we used to go play video games. So we used to play, like, for $10 we used to play 5 games, so that would be 15 minutes, and FIFA. So each year the guy had to upgrade the games, so that's how we played at his house. So that's what I'm gonna do. That's what we used to do until I started seeing him, like, he was trading. But now this guy wasn't like a truly professional trader. He used to take signals, you see. He used to be taking signals, and then he was telling us, yo, there's money here. But yes, the signals he used to take, they were winning signals. And I was like, okay. I advised a friend, and then we ended up getting scammed. But that was on Telegram when Bitcoin was quite a thing during COVID. That's when everybody started knowing about Bitcoin, because it started becoming famous, because now everyone was indoor and quarantined in their houses. That's when you all knew about Bitcoin, mostly in my country. But yes, now that we all enjoy that. Now I know Forex. In grade 11 I tried being focused, and then I opened a Forex account on, what's the program? Tickmill. Is it Trickmill? Something like that. So they give you a 30 bonus, 30 USD bonus. So you have to deposit 100 USD to be able to withdraw the profits you make from the 30 USD bonus. I think I'll do that, and then deposit, and then see what I will do. Yes, probably I'll do that. So that's what happened. I blew a lot of accounts on that. So my highest win on that, on Forex, was in 2024. Yes, 2024. So I opened a Just Market, because Just Market now was giving a 50% deposit bonus. So I deposited my 10 USD, and then I got like 15 USD. So that was like something quite for me. And then I opened trades. So I liked gold, because I like the way gold moves. It makes you money in a quick time. And we should not categorize Forex as a get rich scheme or something. No, I just liked gold because of its volatility, and it moves. When it moves, it moves. That's when you know that gold is moving, gold is melting, gold is going. So I decided that I entered into my gold trade. So I was in the library chilling, and then now my account was like, ooh, from 15 to $7. Now I'm down, I think $5-6. Now I'm left with 7 USD. 7, that would be 5 of the, what do you call this, 5 for the bonus, and then 2 of the initial deposit from the 10 USD. So now in total I've $7 equity. So I was like, ooh, let me analyze. That's when now I was truly getting to understand the Falcon strategy. So I was like, 5-minute chart is giving me impulse correction. I was like, impulse correction, I'm seeing a correction here, so I'm gonna enter for a sell. I entered the sell. I was like, entered myself, the things are going well. I'm like, later I'm checking, I'm like, $10 on one trade. I mean, $10. I entered another, entered another. I held those trades like, I held those trades for like 2 days, until it reached 500 USD. I closed my trades. I held those trades for a day, for 2 days. But one thing I totally messed up was that I didn't withdraw the money. You know, yes, I did, but I transferred that money to another broker, and then I started trading on that broker. But when I got on that broker, because that broker now it's Deriv, Deriv is what do you call this, indices and all that. On Saturday you can trade on weekends and all that. So I started playing around with the money instead of withdrawing the actual profit, and then I just started enjoying that. So I ended up blowing the profit on Deriv and all that. The money started, I blew that. And then last year, I think, no, last year I also made profit. I made like almost 5k profit on from a 200 ZAR deposit. I was like very happy. And then this year again I made another in January. I was like, things are going very well. And that profit was made on GU because I was very happy on GU. I was making money. Everything was going very well on my side. So yes, guys. So I'm saying, if you really want to learn on how to master the Falcon effect, you can drop a comment and a like. um I will share, and you can drop your comment. I'll get back to your comment, and I'll drop my Telegram username, so you can text me on Telegram, and then I will help you for free. I'm not charging anyone anything. I'm just helping for free. So because I want to start having weekly or Saturday market breakdowns with people, because they say the only way you learn is by teaching others. So this is what I want to do. I want to teach others my skills, because now I won't only be proving myself, but I will be proving you guys, because you guys will be looking up to me. So I want to teach you guys my skill, like passing it on to another, you know. So I will learn and you will learn. So we are both learning, 50-50 chance. So, and my biggest dream is building a community full of traders, genuine traders, because I really like how the Falcon FX community is. They do the meetups. You see them, Dubai meetups, Manchester meetup, German meetup. I'm like, who? I wish I had a whole community, because in my country, guys, there's no community like that. All these guys do is that they show up, they have seminars, they will give you t-shirts, what, offering you funny things, man, and scamming all that people. That we are not into that. And why I really joined Forex is to build myself. Forex money is not to make me rich. Yes, it's there. You can be rich from Forex, but for me, it's to build my portfolio and all that. I want to use that money, invest into other things, building my portfolios and all that. Yes, so guys, if you are really interested, hit a comment, and then I will reply to the comment. So I will be dropping weekly updates on the trades and all that. So thank you guys, and I hope you watch the video throughout. Thank you guys. Enjoy the video. Don't forget to share, like, and subscribe.